Hi, Jim Yent from Golden Years Advisors, the home of the Kairos formula. This is the second of one of our video updates for the fourth quarter state of the market. And now we want to take a question that all investors are concerned about. What about inflation? How high is it going to go? How long will it last? Because it sure doesn't seem transitory. So let's run to the data. On the right, you see this is University of Michigan's inflation expectation chart. And on the far right, you'll see a dark blue number, which says that's really like the short-term expectations of what most retail investors are assuming. And it's about a 4.8% inflation rate. Now it's interesting because the September Consumer Price Index, CPI, just came in, and currently we're already doing higher than that. Inflation came in at 5.4% year over year. And in fact, at the producer level, the inflation level that companies are seeing, it came in at 9.8. So that's why there's a lot of concern. Hey, it's rising, and people are worried that the Fed is getting behind the curve. In that same chart on the right, you'll see a light blue number, which is the long-term expectation of where inflation will be 5 to 10 years down the pipe. And it's under 3, it's about 2.8. So inflation is going to keep rising, and here's why if we look to the next chart. What you'll see on the left is that's the month-by-month inflation numbers. And for 2020, we actually had negative numbers, negative growth, because we just shut down the economy completely. And if you look at the bars on that left graph, you'll see 3 black ones. That's literally last year's October, November, December, and they're relatively low numbers, 0.1 and 0.2 numbers for 2020, October, November, December. So let's go to the far right of that left side of the chart, and we're currently at 0.4% per month. Well, we all know we're seeing prices rise, and we all know that there's shortages and supply chain constraints. So what's going to happen is those black bars are going to disappear over the next 3 months, and you're going to see new blue bars on the right, which chances are going to be 0.4 or higher. So we're going to watch inflation actually increase. So let's look to the right side of the same chart. That's what you see. The black line is the published inflation numbers, but then those colored lines to the right is saying, well, all of them show rising inflation over the next several months, but then at some point we hit a peak and it starts to descend. And the only difference between the 4 colors there, blue, gold, gray, and that brownish orange, is where does it end up at? The gray line is if inflation a year from now is about where it is today. And if that were to be the case, we'd be doing about 3.7% inflation next year. So the key takeaway is inflation's on the rise, but at some point, whether it's the shortage of labor or the supply constraints, should get some relief, probably summertime or beyond next year. So what does this mean for the economy, for economic growth, or the stock market? Once again, let's go back to the data. Q1 and Q2 both had really strong GDP growth of well over 6%. Remember, the trend, the long-term trend that we've had is about 2-ish% to 2.25%. Third quarter, because of the Delta variant, slowed down dramatically. And you'll see in this chart, people are saying somewhere between 4.5 to 5.5. It could be lower because that's how dramatically we slowed down again, not just in the US, but across the world when the Delta variant rolled out. So we'll wait for that. That number is coming out soon this month. But then in the fourth quarter, we expect it to accelerate. So if we look to the right in the gray box, on a full year basis, the belief is last year was negative GDP, but this year it'll be somewhere in the 5 to 6% range. And what we'll see by year is a deceleration. So if we're somewhere 5 to 6, in 2021 and 2022, we'll be somewhere 3 to 4, and they don't show another year out, 2023, but the belief is we'll go more to that longer term 2-ish% growth trend. If we go to the lower part of the chart, and I want you to focus on the 2021 column, corporate profits for this year are going to be in that 30+% range. And next year, they'll be decelerating to still strong single digits to low double-digit numbers. So that's why we're pretty comfortable with the economic outlook, at least over the next 12 months. And if you ask why is the feeling like this from Wall Street? Well, on this next chart on the left side, 2021, you'll see the blue area. That's the amount of inflation that is actually raising the revenues of corporations because they're passing on their higher prices to us, the consumer. So 4.25% of their growth for this year is really just going to be the rising prices that we're all paying. The lighter blue area is showing that they've had tremendous margin growth because they cut it down to the bone during the pandemic, and now as they bounce back, there's all kinds of gains of productivity. Flash forward one column over, now that dark blue area, they're not going to be able to keep passing on those prices as much. So that shrunk, as well as the light blue area. Profit margins will contract in the year ahead, but still the big picture is left column, kind of 30-40% profit growth for 2021. Right column, next year, high single digits, low double digits. So outlook is still strong, even in the midst of inflation. Once again, if you need any of this data, let us know and stay tuned for our next update. Thank you.